The global chip shortage is about to hit the iPhone. It's a sign that even some of the largest, best supplied companies can no longer sidestep the semiconductor crisis. Apple posted blowout earnings yesterday, but not without a warning. The iPhone maker said the chip shortage would extend to its smartphones this quarter and slow revenue growth. Joining us now to talk about it is Wedbush Securities Analyst Dan Ives. Dan, good to see you. It has been a while. You called this another drop the mic quarter for Apple, but what about this warning about the chips? Comes at a really bad time. They're looking to roll out that new iPhone in the fall.
Yeah, and the chip shortage, it's an overhang not just for Apple, but every automaker and technology player out there. But at the end of the day, it's a rounding error relative to what it's going to do from a supply perspective over the next 1 year, 18 months. I mean, they're in the midst of a super cycle. So we could be talking about 3% of demand, maybe moves out from September to the December quarter. Take a step back, gold medal performance last night in terms of that performance, $5 billion iPhone beat. Considering the chip shortage, it just shows the demand continues to be underestimated by the street. We still think a year from now, we're looking at a $3 trillion market cap.
Curious to know, Dan, speaking about that demand, now that we have, the iPhone 13 coming out, now Apple hasn't really indicated that there's going to be any delays, so expecting that to be, I believe, right on schedule, so around the end of September. What can we anticipate for the demand, at least when it comes to the iPhone, the new iPhone that they have? Because this is a segment that we have seen, at least previously, Apple has started to falter in.
Yeah, if you look at iPhone demand, especially over the last year, I mean, that's what significantly beat along with services. I think when you look out over the next year, our supply chain checks going to iPhone 13, it shows that underlying units could be up 12, 15% from iPhone 12. So I think that continues to be the most important point in terms of this elongated super cycle playing out. Remember, it's the 1-2 punch because the services, we think that alone is worth $1.5 trillion. It's part of this re-rating that we're seeing in Apple. Remember, if you go back, the skeptics continue to say the innovation's in the rearview mirror, and ultimately the growth is too. You're seeing a renaissance of growth in Cupertino, and that's why this is a stock, in my opinion, on its way to a $3 trillion market cap.
And we should mention you maintain your outperform rating on Apple. You've got a $185 price target. I want to switch gears for a moment and talk a little bit about Microsoft because total revenues came in at $46.2 billion, absolutely blowing it out of the water. Again, we continue to see strength in their growing cloud business. Why are you so optimistic about the Microsoft story, Dan?
Yeah, and that continues to be the cloud. I mean, if you look and you take a step back, only a third of enterprise workloads are in the cloud today. We think going potentially 70% in the next 3 years. Microsoft, and as well as Amazon AWS, and we'll see that tonight, is that continues to be a disproportional beneficiary when you look in terms of move to the cloud, what they're doing with Azure as well as Office 365. And that, in my opinion, is a $1 trillion market opportunity. It's not just Microsoft, it's Amazon, Google, and others. But that's part of the re-rating that you're seeing in Microsoft, disproportional benefit of cloud. They right now are really in a massive position of strength. And that's what you saw last night with just those jaw-dropping numbers.
But Dan, looking out ahead, to the next couple of quarters, what kind of sustainability really are you seeing for some of these figures?
Yeah, and when they talked about Azure being similar growth into next quarter, and everything we see from our checks, talking to customers, talking to enterprises, we're just hitting the next gear of growth in terms of cloud. And I think that's really been the misnomer, in my opinion, in tech, is that many view it COVID pull forward, no doubt. Zoom, Citrix, a lot of the collaboration names. For Microsoft, I think this is a massively underestimated digital transformation. And that's why I think it's one where, as this continues to play out, we can see double-digit growth, and it's one they're going to continue to defy expectations, which is why this remains our top cloud pick.
I want to ask you quickly about Tesla before we let you go, Dan, because I know that you also watch Tesla very closely. And we see that company also being impacted by the computer chip shortage, as are many, many companies. And Elon Musk came out Monday and actually said it might affect the timing of their Cybertruck, which we've been waiting quite some time for. This week we saw Lucid Motors, or I guess it was late last week, saw Lucid Motors go public, yet more competition for Tesla. What would it mean for Tesla to hold off on bringing that Cybertruck to market?
Yeah, and look, in terms of the chip shortage, I think that was sort of the glass half empty view post-quarter. It's something where it's really out of their control. You're going to see some of these delays, but it could be 3 to 6 months. It doesn't change the overall green tidal wave story, especially now for a company that's starting to be profitable, actually selling cars rather than just EV tax credits. Last year was a Cinderella story for the stock. This year's been underperformance. I view it as just a digestion period. A year from now, we still have $1,000 price target. And this continues to be, it's a big enough ocean for more than one boat. You're going to have a lot more competition, but it's only 3% of auto today is EV. So there's going to be massive winners, and we think Tesla kind of leads the charge.
All right, Dan Ives over at Wedbush. Thanks so much. Appreciate your time.